Hi, and welcome to Coffee with Katie. Coffee with Katie is an initiative that I started to help simplify the financial conversation. So, we are in February of 2022, and I just wanted to shoot out a couple of reminders for this first quarter here. First of all, if you have a retirement account and you're age 72 or older, you should have received from your custodian your required minimum distribution amount for the year. So that's that RMD that you often hear about that you have to take out of your retirement account before the end of the calendar year. Just want to mention that comes to you in a 1099-R. And if you have any questions about, when to take that, how to take that, reach out to your advisor. Feel free to reach out to us. I will say we often recommend to our clients, if you don't need that for current income, delay that until fourth quarter and allow that money to continue to grow tax deferred. Also, a good time to think about charitable contributions and how that could fit into those RMDs. Really good conversation there for another time. Speaking of 1099s, 1099s, dividends and interest, and your 1099Bs. The 1099B is what you get if you have any buy or sell transactions for the previous year in a taxable account. Those 1099s typically go out the middle of February, but could come as late as March 31st. And so get your tax information to your accountant as soon as possible so they can start, figuring out your taxes. But I always recommend waiting to finalize those taxes until after the end of March to make sure that you're capturing any corrected 1099s that may have been issued. Couple of reminders around IRA contributions. The tax deadline this year is April 18th because April 15th actually falls on Good Friday. So it was pushed out to April 18th. That's the day up until to get in any traditional IRA contributions, Roth IRA contributions, HSA contributions. I'm not going to go into all of the details about those, but just to let you know, the contribution limits from last year have not changed to this year. So $6,000 you could contribute to a traditional or Roth IRA. Plus there's $1,000 catch up if you're over age 50. So that has stayed in place for 2021 and 2022. So when I mentioned that deadline, that's for a 2021 contribution. You could also make a 2022 contribution, assuming your income is in the right thresholds. And if you have questions about that, once again, feel free to reach out. Finally, a reminder around 401k contributions. So if you have a 401k or 403b at work, it's a good idea to go in and check what your elections are as far as contributing to that. If you got a raise last year, or if you turned age 50 and now you're eligible for a catch-up contribution, you may want to adjust how much you are contributing. Additionally, the contribution amounts went up in 2022. So we saw a good, $1,000 bump to the contribution limits. So in 2022, you can put in $20,500 plus a $6,500 catch-up contribution if you are eligible for that. Just a good time to double check. Once again, if any of this raises questions, feel free to reach out to us. I would love to hear from you at kbrown@mortonbrownfw.com.